challenge that we have is transportation and logistics for that energy, and delivering that energy when it is needed.
So we actually we like bespoke equity. We don't mind bespoke equity, but on the debt side, we don't like bespoke at all. We like things to be as standardized as possible.
So one of the preferred way of investing in the infrastructure space is to invest at a platform level.
We manage several donor funds that we're deploying alongside our commercial financing, and the best way to deploy those are really for de-risking projects for everybody.
So we are facing with the investors which has very limited understanding on the project finance. The decision-making process among those unexperienced investors are the key challenges from the sponsor's perspective.
Very often when we start talking about bankability, we get stuck in a loop of theory. The typical project contracts and risk allocation and, political risk insurance, regulatory certainty, all of that.
I think we just have to be very conscious about making sure that the end goal of a blended finance is a realizable commercial project that has got legs on its own.
Very good event. I think the part where you brought in somebody to do a fireside chat between the two panels, very interesting. I think it gives a very good perspective into how developers actually go and build projects and what their considerations are.
What I like the most about it, which is very rare, is how the sessions connected. So the first session where I was on, we talked about renewable energy mostly, how to make it bankable and so on, and scale it up. But then the last session was about data centers, etc., which are actually using that energy. And the fireside chat in between, the connection was made. The challenge question was given by that fireside chat. So it's very rare to see sessions that interconnect like that. And I think that was very enjoyable.
I think the message, perhaps from a commercial banker's point of view, is really that what is not broken, let's not try to fix. Because the message really from us bankers is the replicability, the certainty enables velocity and momentum.
The data center opportunity from my lens, from a renewable energy investor lens, I think it can be a huge catalyst for the exponential growth of renewable energy in Southeast Asia.
I really enjoyed the session. I thought the conversations were very meaningful and very relevant for today. You had people across different segments, renewables, infrastructure, data centers, all hot topics for today. A lot to take back home. Thank you.
There's no denying that meeting people, bumping into people, going back and re-meeting people, it's way ahead of anything you can do on Zoom. So I have no doubt that this is here to stay, and it's really contributing to making something happen. The ultimate aim of all this is to get something financed and get something built.
We see digital infrastructure as being critical to emerging markets, especially as conversations around productivity, digital connectivity, and AI adoption come to the forefront.
Because we are a REIT, we're meant to provide a stable yield plus some growth. The growth will come from rent growth plus acquisition growth.
So the same reason why data centers are growing so fast and so much, exponential capital intensity is there. It's also driving certain things like execution risk.
The other thing also is we're helping to drive new low carbon energy sources. I think nuclear has become a more popular topic in recent years. I think partly driven also by the demand by AI per se.
The banks have been very incredibly supportive of the data center build out in Asia for a long time. And we expect them to continue to support data center financing. But what's required to allow for sustainable financing of data centers would actually be debt capital markets.